Well, what's going on, everybody? Tiger here. Finally, just now getting around to my technical analysis video. Today is Thursday, the 10th of April, and it's been a crazy, crazy past week or so in the markets due to all these crazy tariffs. So, what a great time to be alive as a trader! I tell you, been really exciting to watch. A lot of people have lost a lot of money. A lot of people have made a lot of money. So the only difference between the two is applied knowledge. Okay, we always heard growing up, knowledge is power, but that's an incorrect statement. Applied knowledge is power. So you gotta apply it, right? So that's the whole purpose of me kind of making this video series for you all. We've already went through the fundamental and the sentimental analysis. Today completes the picture. This is the technical analysis piece. So I'll try not to take too awful long on it, but it is very important to understand the technicals on a chart. When you have good fundamentals and a good sentiment for a particular asset, you just have to time the trade. You can't just willy-nilly go and hit the buy button or the sell button, right? You gotta pinpoint it into a specific spot on the chart. So that's all this video is about. This is what they call the sexy part of trading. Okay, so I'm just going to jump right into it real quick. So if I can go over here to my trade plan, I'm just going to kind of read through these 10 or 11 steps, and then I'm going to show you on a chart how this works. Okay. So step number one, we have to look for strong supply and demand zones and mark those with a rectangle. A supply and a demand zone is where buyers and sellers temporarily agreed upon price. Okay, it's where price moves sideways on a chart before price either leaves that zone and jumps up or it jumps down, right? So I'll show you what the difference is on the chart here in a moment, but that's a supply and demand zone. That is one of the most important things in technical analysis, is finding where those agreements were. Okay, because chances are if price returns to those zones, depending on, if we got the fundamentals and everything else right, if the technicals all look good, typically when price revisits that zone, price will have a reaction. It'll bounce off of that. Okay, whether or not it continues after that bounce, that's dependent on all the analysis. But anyway, so number two, we're going to find out where supply and demand is in relation to the overall curve. This is a big step that I don't think very many traders understand or have even heard of. What the hell is a curve? Well, we have to look at the longer time frames, the larger time frames, to find out, is price on a higher time frame? I'm talking daily, weekly, monthly. Is price closer to a supply zone, or is it closer to a demand zone? And then you really want to do the opposite from those locations, depending on trend and zones and everything else. So that'll make a heck of a lot more sense when I show you here in just a moment. Okay, but it's important to know. It's important to know the curve. It's important to know where price is relative to the big time frame. So number three, how fast did price leave the supply and demand zones? It's important. If price is just slowly coming out of that zone and slowly trickling up or trickling down, it's not as good of a zone as if price coming out of that zone and then shooting up quickly or dropping quickly, right? We want fast movement, because fast movement means if price does return in a fast way, then it's an even higher chance of it hitting that zone and bouncing back the opposite direction. Okay, so that'll make more sense again when I show you on the charts. Number five, we want to buy under fair market value if we're going for a long position, and that's using the master pattern. And then the opposite is true if you're short selling. There's supply and demand zones, and then there's something called a contraction point on a chart. Okay. That contraction point, again, is agreement between buyers and sellers. So if the overall trend is up and we find those contraction points on smaller time frames, it's a good idea to buy slightly below that, because that's where your fair market value is, anything below that zone. Again, it'll make sense when I show you on the chart. Master pattern is super powerful, though. I mean, super powerful. Okay. Number six, buy long if trend is up, or short sell if trend is down. Simple as that. Not a whole lot to add to that. Number 7, make higher time frame relative strength index. Make sure higher time frame relative strength index is above 60 for longs or below 40 for shorts. That's the RSI indicator. It's basically just showing you the strength of a move, okay? And again, this will make sense when I show you on the chart. Number 8, only trade fresh supply and demand zones with volume profile spikes that broke previous supply and demand. That's a big mouthful, but it's important. You hear a lot of times people that trade support and resistance. The more times it hits that line, the stronger it gets. Look, it's really a controversial topic. A lot of people think that, and a lot of people think the more times it hits, the weaker it gets. The reality is a support and resistance line is very similar to a supply and demand zone. The only difference is a zone gives you more of a room, more wiggle room, essentially, to place your buy and sell orders. But every time it revisits that zone, think about it. Price only leaves supply and demand zones because if it's going up, the buyers won. There were more buyers than sellers. Well, there's still buyers that want to buy at that level. So they hope that price comes down to that level because they saw how fast price moved. They want price to come down so that they can fill their orders. So there's unfilled orders in that area, in that zone. The more times it touches it, the more orders get taken out of that queue, okay? So, that should weaken it. So we only want to buy if price hits that zone the first time. If it hits it the second or third time, not interested. Again, I'll show you on the chart soon. Let's see here. Number 9, look at relevant candlestick patterns. Okay, this is more of a timing within that zone. I'll show that. Number 10, make sure there's at least a 3-to-1 risk-reward ratio. Okay, so if I'm buying in demand, I want an overhead supply zone to be quite a ways away. Think of it this way: if I have 1 unit of a zone, I want that the supply zone. I want that more than 3 units away. Okay, 3 or more. So I'll show you on the charts. It just basically increases your profit potential. And then finally, number 11, only trade currency pairs that have a daily average true range of at least 100 pips. Look, I don't want to trade something that moves like molasses, okay? About half the currency pairs out of the 28, that's the most popular. About half of them are fairly slow, so I try to avoid them. I want volatility. I want to trade something that moves, okay? The more liquid, typically the more liquid a currency pair is, the quicker or the more volatile it can become. And not always true, but if you're sticking with the US dollar pairs, the euro pairs, the pound, and then the Japanese yen, some of the more liquid of the currencies, then those are good currency pairs to look to mix and match. So anyway, that's just an overview of my trading plan. Okay, now let's take a look at the chart, and I'm going to kind of show you what I mean on some of this stuff. So, excuse me. All right, so right now I've got the euro Australian dollar currency pair. Okay, so as you can see, price is going up. Okay, this is a daily time frame. This means the euro is appreciating in value relative to the Australian dollar. Okay, because the euro is the first on the pair. So as you can see over here, it's just a sharp increase, right? That means the euro is doing well compared to the Australian dollar. Okay, so let's take a look at step number 1. Look for strong supply and demand zones and mark with a rectangle. Non-mitigated, again, that just means it has not been touched. So let's go take a look and find a supply and demand zone. Now, where do I look for supply and demand zones? Okay. Well, first of all, I'm going to look at 3 different time frames. Okay. Me personally, because I'm a currency trader, I like to ride the coattails of the big banks. So I like to look at my I like to look at a top-down analysis. The curve, okay, I'm going to look at that on a weekly time frame. The trend, I'm going to look at that on a daily time frame. And then my entry, I'm going to look at that on a 4-hour time frame. That 4-hour time frame is where I'm looking for my supply and my demand zones. Okay, so right now I've got the Euro Australian dollar on a daily time frame. Okay, this is where I'm looking to see, oh, it's clearly in an uptrend. Okay. If I want to set my curve, I'm going to go to my weekly time frame. So, but again, I want to find my supply and demand zones. So I'm going to the 4-hour time frame. Now, each candle represents 4 hours of price action, okay, within that specific period. So if I'm looking for a spot in time, the origin of a strong move up, okay, because it's an uptrend, I'm looking for the origin of a strong move up. Well, where's an origin of a strong move up? I got a few of them here. Okay, I'm going to take my rectangle, because again, that's what it says, mark with a rectangle, right? Let's get my rectangle tool, and I'm going to just go mark some zones out here. All right, if I go to the origin of a strong move, there's one way down here. Okay, it's quite a ways away, but it is a zone. Okay, and then I'm going to mark that, I'm going to make it green, okay? All right, so that's a demand zone. Watch, so look at this. Price went down, based, and then shot up like a rocket. So that is the origin. Okay? Right there. That's the origin of a strong move. Now, if I go a little above that, I see another one. It's a little bit wider, but this is another demand zone right here. Okay, it's a little wider. Because what happened here? Price went up, it based and went sideways for a 4-hour candle, and then it shot up again. So that's technically another demand zone. In fact, if I kind of move back a little bit, then we can see it a little better, okay? So the first one, price was going down, it based, shot up. Well, within that move up, it based again, but then shot up. So it's okay, you can mark multiple zones, okay? You don't always pick the right zone the first time as far as if price comes down, right, and you want to buy. So it's okay to mark a couple or a few, right? Now here's another one right here. Look at that. See where my cursor's at? Let's put a rectangle around that one as well. Look at that. Okay. So price shot up. It went sideways for a 4-hour candle and left the zone and shot up like a rocket again. That's a pretty strong one. Okay, that's a pretty strong. Within an uptrend, we want price to come down on the lower time frame, touch that zone, and then there's unfilled orders in that zone right there. Unfilled buy orders. Why? How do we know that? Because price shot up like a rocket, and meanwhile there's more people that were wanting to buy here, right? There's more people that wanted to buy there, but they missed their opportunity. So they hope that price comes back down like it did, right? So that they can buy their order. They might have limit orders set, or they'll just buy market. Fill or kill, right? And as you can see, price clearly bounced up and it's going up. So there's a great example right there of how powerful a demand zone is, right? Now that's basically number one. So number two, find out where supply and demand is in relation to the overall curve. Okay, so here's what I'm gonna do now. So I'm on a 4-hour time frame for my supply zone, my demand zone. Now I want to find a supply zone. Okay. And here's what I can do. I can basically kind of use this area right here. I mean, it's not the greatest of supply zones, but this is more so for a target, like a profit target. Like if price goes up there, I want to maybe potentially either sell my position all the way to make a good profit, or maybe I want to sell half and let the rest run in case it goes through that zone. Okay. So and then this is the important thing right here. If I take my ruler and I measure out this demand zone, okay, that's 104 pips or 0.59%. Remember, this is where I want to measure my 3-to-1 risk to reward ratio. So that's 1 unit of risk, okay, is basically 100 pips. We'll call it 100 pips. That means I want at least a 300 pip profit in order for this to be a good profitable potential trade. So so I marked it from the proximal line of the demand zone, right? Now I want to go up and find 300 pips, okay? Boom, it's already achieved a 3-to-1, right? Look at this. Actually, 3-to-1 would be about right here, okay? So as you can see, that potentially worked out if you would have bought that, okay? Here's a hint. I actually placed this trade, and I'll show it to you in a minute. And in fact, I'm still in the money. So so now I want to show you the curve. So I'm going to go all the way to my highest time frame, my weekly time frame. Now I want to find a supply and demand zone or a support resistance line on this time frame. So if I just take a quick look, all right, there's one right here. This is a demand zone on a higher time frame, and I'm just going to mark this with a yellow line just so we can differentiate. Okay. And then I want to look above and to the left for an overhead supply zone or a resistance line. So I'm just going to kind of go up here and mark out a top. Okay, way back in time, 2020, there's where price shot up. Okay. Now I prefer to find a zone. So if I look here, that's not really a supply zone. I mean, it's not a good looking supply zone candle on a weekly time frame. So if I go down to a daily, I can take a look, see if we got anything on the daily, which is where I prefer. Okay, I don't really have I clearly have a resistance point, but I don't have a supply zone yet. Okay, so let's go take a look down on the 4 hours, see if we find anything on the 4 hour. So I'm just going to zoom in, that way I can go all the way back in time, however far back I need to go. Come on, update for me. Okay, there we go. Okay, so going back in time, okay, there's my area right there. Let's go take a look and see if we have a supply zone in this area. Okay, well, we kind of do. So take a look at this. See that candle right there? All right, that last green candle before price dropped like a rock. So here's what I'm going to do. I'm just going to mark that like this. Okay, so take a look at what I've done. I've marked out the green candle, the body of that green candle from proximal line to distal line. And then I'm just going to move that box all the way forward to the current time. And then I'll show you why I'm doing this here in just a moment. Okay. So since I have a demand zone way down here, okay, on a weekly time frame, and I have an overhead supply zone, okay, and I had to find that on a 4 hour just because I didn't see anything on a daily or a weekly. But on a 4 hour, I did, and it's a very wide candle, but all I care about is this. I want to take the difference between that area, and I want to mark, I want to go from this proximal line of the supply zone to the proximal line of the demand zone. Okay, let's do this. And then I want to do this. So what have I got here? What the hell is this, Tiger? What the hell is this? Okay. So what this is telling me now, now that I've got this out, and I'm going to go back to the daily time frame. Actually, I'm going to go to the 4 hour. So what this is showing me is the following. Anything in the red, okay, this is a no-go area. This is not a great place for, especially new people, to place trades. They say don't diddle in the middle. Never diddle in the middle. So people that are trading in that red zone, they're getting chopped to pieces, as you can tell from the recent price action. From basically the end of Friday through today. Today's Thursday, right? Yeah, today's Thursday. So look at all this sideways price action. Now this is in the center of the overall curve on the highest time frame. People are buying, they're selling, they're buying, they're selling, they're getting stopped out. People bought here thinking, oh, we went over this high here. Okay, they put their stop losses down here. The big banks said, nah, B, we're going the other way. They sent it all the way down, took out their stop losses, right? And now we've hit this zone. Basically, it all boils down to this. On the higher time frame on the curve, you only want to buy in the green zone down on the bottom of it, and you only want to sell in the top part of it if you're short selling. So since I know that my daily time frame is showing that I'm in an uptrend, the only bias I want to have is buying. Well, I only want to buy when prices are on discount. Prices are on discount when they come all the way down to the green area because it's low on the curve. If I try buying up here in the green part on the top, that's buying high on the curve. That's buying retail prices. I don't want to buy retail as a trader. I want to buy wholesale. That's why I want to buy down here. Okay? Buying and selling in the stock market is the exact same thing for the way your behavior is when you go buy anything in life. Groceries, clothes, brand new clothes, a car. You go see a jacket, you ladies, okay? You go see a jacket at whatever, you go at the mall, it's $150. Well, you guess what? A lot of you may not want to buy it at $150. You might wait till the next week or 2 weeks later till price comes down to $125 or $150, or wait till it makes its way to Marshall's when it's only $50, right? You're waiting to buy at a more wholesale price. You don't want to pay full price. Nobody does. That's all it is. That's all trading is and investing as well, right? If you're doing it more long term. All trading and investing is buying on wholesale, selling into retail. Okay, this is the same way you buy and sell everything. That's all trading is. So if I'm buying low on the curve, I'm buying in wholesale, and I want price. And again, if I'm wanting to short sell, if it's a downtrend, I want to sell in wholesale or sell in retail at the top and buy in wholesale. So that's the curve. Sorry if that was a long-winded way of explaining it, but okay. Here's another important point. Number 3: how fast did price leave the supply and demand zone? Well, let's go take a look. Let's go to my 4-hour zone. Since I've got curve out of the way, I'm just going to get rid of this. Okay, that way it's a little cleaner. All right. So we've already determined that's our demand zone, right? So here's what I want to pull out. I want to pull out this tool to show you something. Okay. Look right here at the top. Strength. How did price leave the zone? So this is our demand zone. It shot up high. Okay, that's the best. That gives you the best score. If price leaves and just kind of goes up and then kind of chops back and forth, right? That's good, but not the best. And then right here's the worst example, right? Price leaves the demand zone, goes up, and that's it. Okay. The idea is if you're looking over here on the best, you want price to break through a recent top if you're trying to buy long. It's called a break of structure, right? That's important. It basically shows how strong that zone is. If that zone is strong enough to take out this area right here, which is technically a supply zone, okay? If price is strong enough to take that out like it did here, then when price comes back, we know that it's a strong area. A lot of people were buying there, thus moving price through that structure. So it's just a good odds enhancer knowing that if price comes back, it's a great place to buy because there's probably some unfilled orders, a lot of excitement, and we want price to hit it and go up, okay? How much time did price spend at the zone? Let's look at this one here, right? That one there. Ideally, if price comes down and it bases, we want it to have, like it says there, 1 to 3 basing candles. Okay, 4 to 6, like this example here, is okay but not ideal. And anything over 6, like this example here, it's spent too long at the zone. So we ideally want to buy from zones where price did not spend too much time. Okay, because think about it. If price spent a lot more time, like this example here, that the buyers and sellers are going to buy and sell themselves to death. All right, there's not going to be any inventory left. All right, maybe the big banks kind of slowly chipped away at it on their end as well. But if price comes down, bases temporarily and shot out, well, we know that probably not everybody was able to buy there. Okay. Has price returned to the zone? I mentioned that earlier. We don't want this example right here or this example right here. We don't want price to touch and then come back and try buying that. We only want this example here, zone not pierced, unmitigated, like I put on my like I put right here. Okay. We want price. We want it fresh. We want to buy it one time. Yeah, like it shows here, if it goes 50% or less into the zone, it's still technically okay to trade, but you might drop your risk. You might wager a little bit less risk, okay? And just don't have as much expectation, okay? And then clearly, if it goes all the way through the zone, like this example, you don't want to mess with it, okay? What is the trend? Obviously, this is my daily time frame I was mentioning. Okay, you only want to buy in uptrends. Sideways trends, you could still trade, but it's just not as strong as the trend itself. And then clearly, you don't want to buy something if it's in a downtrend. Okay. Where's the curve and where in the curve is the zone located? This is what I just went through. Okay. Think of the Hungarian flag. All right. If I find, I think I have a Hungarian flag here somewhere. Yeah, right here. Look at this. All right. Look at that. If I'm on the daily or the weekly time frame, like I was just a little bit ago, right? I only want to sell in the red area. I only want to buy in the low area. Okay, low on the curve, high on the curve. The Hungarian flag is perfect example, okay, of what to do on the highest time frame. And then again, the white space, don't diddle in the middle. Clearly, my demand zone, as you can see, was my demand zone was in the green, right? See that? See my demand zone? It's in the green. That means I have permission to buy. If that demand zone were further up, it could still be a buy if you've been doing this long enough. If you're brand new, I wouldn't recommend it. Okay, prices can chop you up. But this is why I personally like buying that area, because it's in the low part of the curve, the wholesale prices. Okay, so I know I beat that with a dead horse, but yeah, that's important. So that's that. Let me see. Is there anything else I wanted to say? Oh yeah. Number 7. Make sure higher time frame RSI is above 60. So what does that mean? Well, if I'm on my weekly time frame, okay, down here you can see RSI. This area down here. Okay, that's my relative strength index. Anything over 6. Now some people use 70-30 parameters. I use 60-40. Really good instructor of mine taught me this, and I kind of learned the mindset behind it. But yeah, basically you have a line that goes up and down, up and down, up and down. It's an oscillator, okay? So if price is above the 60 level, which is basically the top of that purple, okay, anything up is a good strong move. In other words, I don't want to buy this market if that line right there we're down in this area, right? Further down. I don't want that. In fact, let me just do this. right? Clearly it's at 76 right now. So because it's over 60, I have permission to buy. Okay. Conversely, if I were short selling something on the higher time frame, I'd want that line to be below 40. Okay, it's just the relative strength. Recent movements, and it just kind of oscillates. It does its thing. Okay. You don't have to understand how it works. Just follow the squiggly lines. It's as simple as that. Only trade fresh supply and demand zones. I went over that. Look at relevant candlestick patterns. And then the ATR. Okay, so average true range. So let me do this. I'm going to show you what I mean by average true range, because this is one of the most important indicators. If we look over here on the right side, okay, this is my daily time frame, right? And if I look down here, I see another indicator called ATR. That's my average true range. I prefer that to be over 100 pips, okay, meaning that's a fairly good moving currency pair to trade. Currently, you can see it's at 288. Now, it's 288.5 is technically how you read that, not 2,885. That's 288 pips. Is 288 above 100? Yeah. It's way over 100. That means this thing's been moving. Now, in all fairness, it's been moving because of the reaction to the tariffs over the last couple of days. But even before that, okay, if I just isolate that, okay, Thursday, that's when it really started spiking. But even before that, it's a pretty good movement. I mean, that's the 100 range right there. So 100 or above. And for this currency pair, it pretty much stays above 100. So good. It's a good, strong currency pair to trade because of all the movement. So that's basically it. Sometimes I'll use something called the VWAP. It's another tool. It's kind of similar to a moving average, except it's what's called a volume weighted moving average. So it basically looks at the volume and how many shares or whatever of something is being traded relative to the price movement. So that's what this tool is. I can go to a low point, okay, and just stick that on there. And if I look at it on a smaller time frame, then a lot of times it'll act as a dynamic support resistance area, right? You can see right here that point came down, touched it, moved up. Okay, right here it clearly went through it. But anything under it is kind of a fair value place to buy, right? So that dropped through my VWAP right smack into demand. Okay, and then now it's clearly going up. So that's another cool tool I like to use, especially for penny stock trading. But I kind of look at it. It's not the most important thing I look at as far as technical analysis, but it is a good one just to kind of see where fair value is, okay, relative to price. Let me see here. Anything else I can think of? Yeah, so I mean that's basically it. Look, if I go on over to my broker here, and I've got a trading challenge I've got going. I got a $250,000 trading challenge account. Look, this is a trade I got into yesterday, this Euro Aussie dollar, okay? You see that green arrow right there. I got into it as soon as price touched my zone, and then it shot up, right? See, that red candle right there is a bullish candle. Now, listen, it's red because price opened at the top of that body. It went up, it went down, and then when it closed right there at the bottom of the red part, bottom of the body. So, look, price was all the way down here at one point, and it shot up like a rocket and closed high on that body, the top 20%. So as soon as it did that, that's where I placed my buy order, okay? Because that was a strong reaction to the demand zone. Now this is a daily time frame, but yeah, back to my 4 hour. And as you can see, look, there were unfilled orders in this area, okay? You got a wick, price moved up. Oh, price came back down, got some more orders from the bottom part of this demand zone, and it shot up. And currently you can see I'm $790 in the green at the moment. unrealized. Okay, it's unrealized gains. So whenever I close the trade, it'll be realized. But that's why the price is moving up and down. Okay, $780, $770. So, ideally, what I would look to do here, which I've already done, is when I place this trade, I put a stop loss under this area. Actually, let's do this. Under this area yesterday. Okay, let's do this. Meaning, I expect price to hit the zone and bounce up, but if it doesn't, and if it goes against me, if price breaks this zone, this demand zone, and goes down to that red line, that's my line in the sand. That's where I have what's called a stop loss trade, okay? That means I want to close my trade for a small loss if price goes down to that line in the sand, okay? So it didn't. It did what I expected because the fundamentals were good. Okay, if you remember, I talked about this edge finder the other day. Look, Euro Aussie dollar right there. It's giving me a bullish signal because it's the retail position, the retail sentiment, the retail traders. Okay, they all think this is going down, so they're all short selling this thing. Well, I'm gonna observe the masses and do the opposite. Okay. Seasonality. This is typically a good month, I should say, month and week for that currency pair in particular to go up. The trend is clearly up. We've had some economic data recently where it's been more of a neutral report. Okay, the GDP, the manufacturing and services purchasing managers indexes. Now the retail sales numbers came out and actually went against this idea. Okay, inflation was neutral, but with the employment change right there. Okay, that was a real strong reading, and the unemployment rate, that was a real strong reading. And then, of course, you got the interest rates, which is a neutral. So basically, when you look at this, you got the retail position, the seasonality, the trend was looking good. You got the employment change, which helped. If I go to Euro and Australia on the economic heat map, here's the Eurozone, just as an example. It's not the greatest numbers. Okay, it's kind of a 50% euro impact. If I go to Australia, I think that's where the big, look at this, Australia, it's a low number. So Australia has had more bearishness to it on an economic level and a sentimental level than the euro. Okay, the euro's been okay, but the Australia dollar has just been more bearish. So that's why I took the other side of the trade. That's why I bought the euro and sold the Australian dollar. So look, currently we're in a good trade on that. That's just that's kind of me putting all the pieces together to show you what it looks like. But yeah, listen, that's basically it. This, like I said, this video was probably a little longer. I think I'm at 38 minutes. But that's basically it. We gotta find where price is on the overall curve. We gotta figure out what the trend is, up or down. We got to find those all important supply and demand zones so that we both have an entry and we both have a target price to reach for. And then look, as price moves up like it did for this trade, okay, what I did was I moved my stop loss, which is kind of compressed. So I moved my stop loss from the red where I had it all the way up to here. Okay, so basically what that means is it's locked me in for in other words, I can't lose on this trade. Okay, see my stop loss right there, SL. Right, if I zoom in. Okay, my entry was right here, where the 744 shows. I moved my stop loss above that. So that guarantees I'm not going to lose money on this trade. It essentially buys me a cup of coffee if price comes all the way back. Okay, so if price comes all the way back to this point, it's going to stop me out for a break-even trade. Okay. But if I look at it in the overall trend, look, I like my chances. Another thing I like to look at is Fibonacci levels. Look, if I put my Fibonacci chart up here, Fibonacci is one of the most incredible things I've ever seen in my life. Fibonacci is everywhere in nature, down to the patterns on flowers, on mathematics, on a lot of things. FIBBONACCI, Fibonacci. A lot of times, if price, this was the low, this was the extreme low, this was the extreme high over here. Okay. So a lot of times prices they like to come back and touch certain levels before they continue. So the 50% line, the 50% retracement's a good one. The 61.8 is a good one. A lot of people call that the golden zone. There's a lot of opinions with Fibonacci and which one's good, but typically if it comes back to 38%, okay, so a third basically, that's a good place to buy and sell stuff. It just depends on if there were good, demand zone candles here. Like, I don't know if there was one there or not, but let's take a quick peek. Yeah, I mean, that's technically a demand zone candle. I would not have used it though, because when price left that area, it there was no fair value gap. That's one more thing I want to touch on. Okay, look at this. If I look at this basin candle here, the top of it, and this green candle right next to it, that's the candle that left the zone. If I go to the candle after that, you see where that wick is? Okay, that's a small zone. The top of the basin candle, we skip the candle that exited the zone and we go to the next candle. It's low. You see that little bitty space? Okay. There's no gap here. That's a small. In other words, the move left, but it came back pretty hard. In contrast with my actual demand zone I looked at on the 4-hour time frame, look, the top of that candle, skip the candle that left the zone and then go to the bottom of the second candle. That's a much bigger area, right? That's a fair value gap. Okay, that's a pretty good indicator that the exiting candle was strong. It moved with gusto because there was unfilled orders. The bulls won so good that they made that giant candle. So that's a little bit about a fair value gap. I don't want to get too deep into that. That's just my own personal. I like to use that just kind of an extra odds enhancer. It just shows the strength of the move, just like here. Okay, the strength. That's what that's for. So anyway, that's a lot. I'll continue to monitor this trade. I already know I can't lose, so yeah, ideally I would want to just see this thing. If it, here's what I want to see. I mean, it might come down. Hopefully it goes up. Might touch that area, come down, and like that. That's ideally the goal here. That's ideally what I want to see. And then I've got options. I can move my stop loss up as we have more higher lows coming in like this here, right? If the price action does that, that's how I'll know where to move my stop losses. But the goal is, hey, take what the market gives you. But yeah, that's the reality. This is the final piece of the puzzle, was the technical analysis. Okay, fundamental, sentimental, technical. If you have all three, you got a good potential trade opportunity, just like the one that I'm currently in right now. Okay. So with that, that's about all I have to say. If you have any thoughts, questions, please let me know. Please like, share, subscribe, all that fun stuff. I'm trying to get this out. I'm trying to grow my page. So anything y'all could do to help, I sure would appreciate it. I'll dance at your wedding. Okay. All right. Y'all have a good one. Bye.